Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video recap for October 6, 2015. So let's get started because there's a lot to go over here. At Sentiment Timing, we believe that human beings in the markets are irrational, and there's always an irrational element at work, and that's what creates market opportunities. Now, we identify these irrational elements through Woody Dorsey's proprietary sentiment database, as well as his technical timing indicators, and that's how we pretty much guide subscribers as far as what we see going on. So can the markets be predicted? Yes, they can be. Yes, they can be predicted, but they're much more predictable on a short-term basis. Now, Woody has been studying the markets for over 40 years. He has developed timing technologies and the expertise to predict market turns, and you guys have seen that in previous videos. The kill zone was predicted on 8/4/15, and it was scheduled to hit between 8/14 and 8/20, sorry, and it actually hit on the 19th, and the S&P dropped 240 points. So we knew to start positioning our portfolios for the drop there. The beige hole was identified on September 3rd to hit on the 17th. It hit exactly on the 17th, and the S&P dropped, I think it's 150 points actually, but I have 140 there. And now we have a black hole that is still scheduled for the fourth quarter. So this is, these are the types of indicators that he throws out. They're way in advance, and it's a big piece of what we do. So the three-step process, and now there's a couple different things with our reports. Is we have Woody that has the sentiment database as well as the technical timing indicators, and he's the one that kind of it lets us know what to expect. He's the expert. He's been doing this for 40 years. And what I try to do is then use a technical aspect to bring things more closer to home on a how to trade it basis. So the timing project profiles are what is our number one piece, so we know what to expect and when to expect it. And then we back up sentiment. We want to see where sentiment is at a particular time, and it has to be interpreted, and that's what Woody does. But it's also a good way to see are things overextended. And you could think of them as a regular technical indicator, but they're based off of human emotions. And it's when you combine that with a technical view, you get a pretty good idea as to whether to chase a rally or to look to fade it. And that's our three-step process, and that's how I actually use, I use the newsletter just like everybody else. So this was our October 1st newsletter. Now, the timing aspect of it, we were expecting the low. Woody was expecting the low to hit between 10.6 and 10.9, with specific bottoming on the 6th or the 9th. So those were the dates. But the thing is that these the beige hole that started here, this actually had a window. So I showed you the window, I think, in the previous video, where it was originally the September 23rd to the 25th, and we did see a bounce on the 25th, but what happened was it broke those lows. So that opened the door for the low to come on the 6th or the 9th. Now, what I was telling people on my end of it, as far as from a technical view, was that, yes, the beige hole started exactly when it was supposed to. We had a huge drop, and these gold little boxes right here are the timing windows. So when we had this big drop right here, I was saying that the easy money on the short side was done. Now, the reason why, this was the top. This is when we were expecting the down move. We were very, very overbought. We had bearish divergences. We had a turn date, and the sentiment was at extreme bullish levels. So we had, as going into our three-step process, everything was in line for a good short position. You can see we had the sentiment readings that were very high. We knew the turn date. And from there, we had the big drop. So once we got into these windows, I was saying that the easy money on the short side was done. and we took out the lows. And yes, I could have personally made more, and we went. So then when we bounced, this door was open for the actual low to hit. And I had a small position. I made a real lot of money on this drop. When we had the bounce, I took a small short position. I had 1/3 of a position, and actually I fell asleep. I really thought that, we were down 29 points on Friday after the jobs numbers. So it looked like everything was going to go as planned as far as the low hitting there. And we ended up going from down 29 to closing up 29. And then it got extended on yesterday. So the timing piece was right and wrong, where, yes, this was the window to cover. It looked like it was going to happen here, but we had the big move. So on this, we had the 10 timing-wise, the October 6th or the 9th, sentiment was actually kind of bullish. So if we look, this was the time period here where we had 5% readings, we had 1%. So this wasn't lined up to get heavily on the short side. And we also had very, very oversold indicators, as well as some bullish divergences. So yes, it would have made sense if we would have dropped, because these don't always play out like this. They didn't. So now what happens is I was holding this short, and I knew not to, add to it. I mean, we broke through everything. So now I want to go through where we are now. And if you look, we now are getting high sentiment readings. This is good. This means that we should get at least a short-term pullback. And if I'm going to use the process, the 3-step process on this, so we already know when the top date is set. So when I'm saying that we have high sentiment, bullish sentiment readings, it most likely is just going to be a quick drop, and what's going to happen is that is going to it's going to probably be a buying opportunity. So we have to take where we were looking short to now, when we get the drop, look to cover shorts and go long, because we know when the top date is supposed to be. So here we have sentiment, like I showed you, we have high sentiment readings. If I show you here, we ran right into resistance. We're overbought, but we also know when the turn is. So it's not something you want to get heavily aggressive on. You want to use, if we get the drop, to cover shorts and then possibly look long. And once we get into our top date, most likely we're going to see some big bearish divergences. We're going to see sentiment at extremes, and we're going to see something like this where we're going to get a number of them. And that is going to be where we're going to be looked to short for the next move down. But right now, things have changed. So when it comes down, you want to take your shorts hats off, look for a long bounce, and once it runs into the potential turn date, then you start looking short again. So that is really the process that I use. And like I said, we had we were expecting the low to hit today or on the 9th. It decided to go a little bit early, and I had a small position for the reasons that I was showing you. Sentiment wasn't pounding the table for a heavy short position. The easy money was already made. Technicals were oversold, and really the main thing that we were missing was the timing. So this is what I'm looking for the current move. I believe that we're going to get some kind of pullback. It reversed at the 78% retracement, and you want to use that to close shorts and look for a long position. So I've been telling you that we had a double. We had a beige hole, black hole. This is done. That was the move that just passed on the 17th, and obviously it decided to make its low on the 2nd. But we still have the black hole that's pending. And again, it doesn't mean it's going to be a crash. It's going to be volatility is here to stay. So we're back to offering the 10 spots for the $74.99 half price. And anybody that decides to take us on that, you're going to get your free membership to MarketsPath. That's where I do the nightly videos, morning notes, email alerts, and you also get a trade room. All that's automated. You'll see the link in there. But again, the volatility isn't going anywhere. And as much as some people are going to say that the actual because this didn't make a low on the 6th, that it was a bad trade. And like I've been saying, the beige hole, this was your easy money right here. So 140 points on the downside, I don't think that's a bad call. Now we know when the top is going to be happening, and what we're going to do is trade the trade. That's what Woody had said to do. So if we get the expected pullback, I'm gonna cover my shorts. I was layering in. I was trapped on this one. I started layering in up here at resistance. So when we come down, I'm gonna cover those and then look to get long again. So with that, hopefully you enjoyed this video, and I'll talk to you guys next week.